Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm sure the question in your minds is what happened on Friday? Why did Rupee make a new low? What were the factors that led to such a move, and especially what's next? Let us understand this from JK. Morning, JK. Please decode the Rupee moves for our listeners.
Good morning, Swaraj. Yeah, I think the rupee movement on Friday left many baffled because that was actually quite contrary to what most people were expecting. And the factors based on which they were expecting a rupee appreciation had not changed at all. Uh, Still, market did close below all-time highs, but once the bank desks were closed, we saw the rupee hit 83.70 also on the exchanges and in the offshore market. Now, one big reason that probably the most justifiable reason that market discerned was that yuan movement on on Friday. On Friday morning, Chinese central bank fixed the yuan at its weakest level after several weeks and above 7.10 psychological mark, and this was previously fixed at 7.0942. No, that resulted in offshore yuan jumping from 7.21 to 7.28, and that probably was the closest and justifiable reason why we could have weakened. Of course, there were reasons that RBI had rather PSU banks had been buying for quite some time, and which had created some dollar shortage, but that would not have actually resulted in 83.3040 being broken. Also, conspicuous was the absence of RBI, who had been seen selling dollars whenever there was a spike up above 83.10, and their absence even at 83.40 was a green signal for dollar bulls to take the rupee to its lowest levels historically. Now, but since the close on Friday, some things have happened. In yuan, there was an intervention from the China Central Bank in onshore market, which has cooled off the rates, although it is not still back to the level seen on Thursday. And another thing is their fixing in yuan today is close to where it was on Thursday. So it is at 7.0943. Now, these things have actually reversed the justification why we would have thought the rupee would be weakening. So all reasons to think that rupee would not be weakening much today. I also feel from the price action on the offshore market when we were away that RBI might have been active in the offshore market, which we have heard earlier as well. So the rupee is now trading below the all-time lows of 83.43, 46, and so possibly we'll have a more stable market today than one would have anticipated on at the close of business on Friday. Of course, yuan still trades slightly weaker. One cannot also ignore the fact that a lot of yuan reaction or the official reaction has been also led by the movements in yen, because both China and Japan are export-led economies. Chinese central bank, while they have moved out of the negative interest rate policy, have tolerated yen weakness to a great extent. Like it is once again trading near a multi-decade high at 152. And apart from some verbal, statements, we haven't seen real action from Japanese authorities to, strengthen the yen or weaken the dollar. And perhaps the Chinese have given a signal that if yen continues to weaken, they won't mind yuan also falling, and then that could be a very undesirable situation, because then we could have a currency war on our hands, and it will impact all the Asian currencies, including INR. So I would say that what we have seen is a trailer, and if does play out the way it happens, that yen continues to weaken and then Chinese central bank continues to fix higher, then we might still have rupee weaken towards 83, 70, 80, or even 84. However, if yen is yen movements are controlled, then I think we might see more stability in the market. This is one of the biggest factors, I would say. Otherwise, so most of the fundamental factors for the rupee are very much positive and are in place. Although we might have some lull in the inflows for the rupee. Otherwise, on the overseas market, there has been some market participants who are reassessing the prospects of Fed rate cuts this year, despite the dot plot being, indicating three cuts, because one member has swayed the expectation into three cuts. If he had voted for two cuts, then it would have looked otherwise. But many of the Fed member statements, individual statements, have once again been on the cautious side, and some are not ruling out much lesser rate cuts, wanting to be on data dependent side as well. So market is, while it is still discounting more than 70% probability of June rate cut and also three cuts in this year, there has been some caution, both on the yield side as well as on the currency side. Dollar has moved away from its weakest level, and weakest level of several months, and then moved to slightly higher range. Although the gains have also been limited, the momentum has been lacking because euro has held above 1.08 levels, and everybody is watching actually what's going to happen in yen. If there were to be an intervention in yen, which is quite likely, I feel this is likely post March year end, and that could be, if it tries to cross 152 levels, and that could be a determinant factor for the dollar moves. Of course, on the US economy, which in turn, determines where the rates are headed, we did not have too many clues. We did have some housing data, which was better than expected. Manufacturing side slightly stabilizing, but the more important data are ahead in the week. You have the consumer confidence, then followed by GDP number for the previous quarter, and then the PCE, all important PCE inflation number on Friday. Of course, this is also a shortened week for US as well. Both US and India will be closed on Friday, and any reaction to the PCE inflation number will be known only on next Monday, when the full market will be in place. So all in all, a lot of sudden burst of volatility in the rupee, possibly going to calm down a lot more than what we expected on Friday evening, and waiting for next clues from the US economy and the broader US dollar. Thank you.
Thank you, JK, for giving such a detailed debrief on the rupee movements on Friday. I'm sure our listeners were very keen to, very anxious to hear that. But apart from that, moving on, Fed statements have been on the cautious front when it comes to the global economy. And we have the PCE data on Friday, but the reaction will be known only on Monday, as this is a shortened week even for the US. So a lot of things to look forward to, and of course, we'll keep tracking how rupee moves and how the yuan moves, since those are quite important right now. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.